All righty. Good morning, traders. This is Blake, and you are listening to the Face Show. I am filling in for Dale Pinkert today. He is on holiday, so I want to welcome everybody in this morning. Let me say, oh my gosh, let me hit these comments really quick. Michael, good morning. Ingmar, again, Dale is out. Bran, all hail the coach. The coach is not in the house today. K-Man, good morning. James, good morning. Ryan, good morning. And Louise, good morning. Paul, AJ, Marcus, Ingmar, and everybody else, good morning. I hope you guys are all, I had to go a little round robin there. So we've seen some volatility. I think the first thing that we need to discuss is how about the Iranian president? I mean, that was when that I saw that headline come out over the weekend. The first thing I thought was, oh shit, like, oh my God, what happened? But if you actually watched any of the like footage of the weather there, I don't know what a helicopter was doing carrying, you know, the president of Iran or anybody for that matter in that weather. It looked horrible, like zero visibility type of horrible. Like that was crazy. So, anyway, just again, that was one of those things that when I saw that headline, I was like, uh-oh, but obviously when you see the weather, you're like, okay, I get it. A couple other things have happened. Well, let me just state this. I think there's some speculation, and I actually love to get Ryan's input here. I think there's some speculation that the BOJ might actually be hiking rates before earlier than expected, and we've seen a little bit of yen, not a whole lot of reaction, but some people are speculating the yen could rally on some speculation from the BOJ. What did you hear over the weekend?
I haven't heard anything specific along those lines. There is increased talk about, if they wanted to help with the yen problem, shall we say, that's one area that they could do. But we've just seen GDP for Q1 at minus 0.5% quarter on quarter. We had the Tokyo CPI dropping a couple of weeks ago, a big chunk. CPI on Friday, core CPI is expected to drop to 2.2 from 2.6%. So yeah, the data doesn't suggest that they should be hiking in June. But then a BOJ survey out this morning said that companies are going to be passing on wages, and they're finding it tough to hire unless they increase wages. So we're really not looking at the past; we're looking at the future. This first quarter, shall we say, of the new fiscal year, let alone the calendar year, and that's going to be important for whether they do or not. So hot number
All
on
right.
Friday. And we might get those expectations ramping up for June, but I think it's a long
Yeah,
shot at the moment.
because we had to move higher in the JGBs. I mean, K-Man, can you explain why this rally is happening here?
Yeah, I think the market is trying to price in a bit earlier hikes than before. And I've been talking about that possibility last week already, that they may do something in June just because of the yen weakness. And it seems like the market is trying to price in a bit higher JGBs, but then we already saw Suzuki talking about those higher yields last week, that it may put the government finances in danger and whatever. But I think the government had enough time to prepare for higher rates. But yeah, I think there's a fair possibility, but not if that we get the Japanese CPI out later this week on Friday. And that may be a big trap if that thing really comes down to closer to 2% as is expected. So yeah, I think there's a fair possibility that Japan hikes sooner than the market pricing before, which was towards Q3 of this year, September, October, November or so. I think there's a possibility they go earlier.
I mean, I'm looking at that chart. That's a pretty bullish chart as far as I'm concerned. It looks pretty.
And let's see what happens when they get to the 1%, because the BOJ still has not taken away that famous line saying that if they need, they would buy more JGBs. So let's see when we get there, or even if we get above, what they do. If they come up with supplementary JGB buying, then it's not going to run too far. But if they don't do anything, then I think there's room for this to continue. The
Yeah. All
market is
right.
at least speculating on it because people are selling Japanese bonds.
Okay, yeah, I mean that's kind of how I was feeling. Okay, it is going to be interesting to watch. I'm going to take a step back really quick. George asked, "Does the bad weather eliminate any suspicion of Israel's hand?" I think so. And I was watching some of the some news stories for a little while anyway. Until after like I said, seeing all the footage in Iran, I was like, well, that's some horrible weather. Like I said, I don't know how it was weather that you wouldn't even want to drive in, let alone be flying a helicopter in. So, um, I the way that it was being reported from Iran's point of view, it seemed like at least yesterday, what I saw, that they weren't blaming anything but the weather because it was, like I said, it was horrible. I don't know what anybody was doing flying around helicopters in that murky crap. It's crazy. Anyway, let's continue on to the markets as well because there has been no reaction whatsoever. And I want to cover just a few things regarding what we're seeing here in the FX market. And it's something that I talked a lot about during the week ahead video, but I do think that the euro is up against some really, really key resistance. But I also want to point out that if you're looking at the euro itself, you can see we're in the middle of this triangle. Like this is the apex of a triangle. And in my opinion, we could probably spend all summer bouncing around, finding some sort of, before we find some direction or until we have a better indication of what the Fed or the ECB is going to do. Like the ECB is expected to cut rates this next month, but beyond that, we don't know. And everybody's trying to figure out when the Fed is actually going to, cut rates or if they're even going to cut rates. And there's, obviously some debate right now whether that's even going to be a possibility this year. But we are starting to see data show some signs of weakness. So therefore, those expectations could grow in the weeks ahead. So I'm not convinced about doing anything with the euro at the moment, although I'm going to just say this. I'm going to, one of the reasons why, and I think everybody could agree with this. One of the things that I would say that, trying to give you an actionable idea right at this moment in time is the euro did complete its bull flag pattern. And you can see that we are obviously at very key resistance at 109. So if you're just looking at pure price and you're thinking, well, we're at 108.60, and if I want to take a short, I know where my risk is. And as a trader, that's all we really can identify is where are we wrong? And in this case, the euro is at 109. I mean, if you break above 109, you don't want to be short anymore because there's a good chance we go from 109 to 110. We revisit, the upper end of this triangle. But I'm going to ask Ryan. Ryan, are you seeing the euro any differently than me? And do you have any feeling on which way the euro is going to go next?
No, I see pretty much the same. It's similar picture in a lot of pairs. We've had a move to, the edges of some of the ranges. 109 is one of those ranges in the euro, and that's where we've bumped our head. So, you're right with your trade view. If you want to short it, you short it up near the 108.90 highs, 109s, but you keep it fairly tight. Sort of above 110, 115. 109, 10, 15. Or you flip it to a long if it does break, because the more we stay up here without a decent pullback, the more chance of a break. But the longer we go without breaking, the more chance we have a steeper pullback, which might take it down to 108s.
Yeah, and let's make sure when you say we could drift back down to 108s. Look, the 108, you can see there's a 200 DMA and the 50 DMA. We're wound up tight. It's kind of like you can see it's like braiding, if you will. It's the 50 DMAs gets on top of the 200 DMA and vice versa. There's a lot of support right in the middle of this triangle. So you don't have much of an edge here, but you know where your risk is. Like I said, we completed a pattern. You got horizontal resistance. It really just kind of done that. Let me take a look at the Aussie. Now the Aussie, we're actually showing very similar type of failure up here. That trend line that you see there, that black trend line, is not only channel resistance, but that goes all the way back to post-COVID lockdown highs back in 2021. So big resistance in the Aussie, and the Aussie looks like it wants to try to roll over. But I want to ask K-Man, what do you think about the euro at current levels? Do you have anything that you wanted to add here?
No,
That's it,
no,
huh?
really not. I mean, I thought this morning, honestly, I thought this morning, oh, maybe we're seeing with all. Well, I'm taking that helicopter thing out of the equation. I see we see quite a bit of positivity in equity markets, yields a little bit ish, even though we rebounded a bit. Well, maybe the dollar starting on a little bit of a weaker footing on the week, but nothing of the likes is happening. Not even getting a test, you know.
Yeah.
Went up into the 80s on the euro, came back, went up to little over the figure in the Aussie, came back, cable same, although cable is holding relatively well. I mean, sterling as a currency is holding relatively well. No, I mean, we're just treading water, really.
Well, you know
For
what?
the
We're gonna
euro
we're
dollar.
gonna come back to this, Sterling, because obviously we have some important data. I think you guys got some important inflation data coming up this week. But before then, we're gonna actually see Canadian inflation, which is gonna be tomorrow. Now, the thing about the dollar CAD, and just so everybody, so I'm completely transparent here. I'm long dollar CAD from the end of last week because I think we're on a major support zone down here at 136. You can see we're actually at the highs of the session right now, and we're really pivoting off of some very critical support. And you can see just below is the 200 DMA. Now, inflation data is coming out tomorrow, and remember, we're going to be analyzing it and going over all the Canadian pairs ahead of the data tomorrow, and then we're going to see the instant reaction to the Canadian inflation data. But Ryan, what are you looking at any other Canadian pairs here? Because I can see we're simply right now trapped between the 200 DMA, which is 135.75. You got the 50 DMA that's capped us literally the last two sessions. So Thursday and Friday, we haven't been able to get above that 50 DMA. But I think we're poised for a bit of a move here. I think it's going to be pretty um, you know, um, you know, uh, pretty easy. Well, it's going to be pretty easy because it's gonna lend us to the idea of what's the next move from the Bank of Canada, because it's kind of neutral at this point. What do you think about the CAD here?
Yeah, I'm slightly on the other side. I'm getting a bit nervous that we're not bouncing off this 136 level very high. We can't get through 136.30. We can't get through 136.50. So I'm actually got some buy stops below 135.85. Sorry, sell stops below 135.85 if it does break. If it bounces,
Yeah,
well,
but let me can I ask you something real quick? You have sell orders below these lows, obviously, and it's
yeah.
these lows right here. But do you care that the 200 DMA is just below that? I mean, I don't know if it's something you even give a shit about. Like I do. I always have awareness of where the 200 DMA is, but you're selling right into it. Does it matter to you?
Yes and no. Of course, it matters. It matters if I get triggered and what happens at the DMA.
Okay.
That could define whether I take some off the table or not. But at the moment, on balance, I think the lows that are in place and this 136, 35, 90, 85, whatever you want to call it, is building up to be a bit of a level that if we do break below it, it might have some legs. At least I would think down to 135.50, that which has got the 100 DMA sitting right on it as well. So, yeah, if it goes, then the weight of it and the fact that we've been holding down here for so long should give it a bit of legs through it.
And I mean, it would be fairly binary. I mean, I would assume like inflation data comes in strong, dollar CAD slides right through that level. I mean, you know, then and maybe there's even more stops below the 200 DMA
Yeah,
as well, right?
but I'll be less keen on that sort of move. So I may even pull my trades if they're not filled by then, because then you might think, oh, okay, well, we've had a bit of a data reaction, and then it all reverses and goes back where it was. So
Okay.
I'll be very careful about the data.
Gotcha. Well, let's you know, let's ask K-Man. K-Man, you have any thoughts about the some of the Canadian pairs or the dollar CAD going into tomorrow's inflation
Um,
data?
no, not really, but I do think that the Bank of Canada is a bit similar to most of the central banks. They'd love to see a low print, not to have to remain so sticky in the yields anymore. So the reaction may be slightly bigger if we get a low one. That's sort of the idea that I have. If we get a low one, people will likely sell some more than sell Canada, not dollars, but buy dollar Canada perhaps. And then your 136, 135.80 is going to be stronger, getting even stronger. So yeah, I'm more than that. No, I'm going to be data dependent, really.
Got it. Well, you know, actually, Michael just brought up the pound Canadian. I mean, that's going to be a pair that's going to be definitely in focus this week. I mean, not only do you have, you know, Canadian CPI, but you also have UK CPI. So, Ryan, you know, I hate to default over to you, but you happen to live in the UK, so you tell us what we should be looking for with the UK CPI this week.
Yeah, well, it's expected to come down a real massive chunk, over 100 pips to
Yeah, like
2.1% from
a big one,
3.2%. A
big
big
one,
one,
right?
yeah. And we've had the Bank of England telling us, Ramsden and a couple of others saying that they expect a CPI to be at or be close to 2%. So they're, and we know what their forecasting is like. They they couldn't get a forecast right in the space of 19 hours the other week. But I think I think the market might be, and they may be, getting a little bit optimistic with that 2.1% print. History, experience in play. I wouldn't be surprised if it came in higher than that. But it's
This,
going to be mover for whether we get a June cut or not.
yeah, yeah. So this is like this gives me the same feeling at the end of 2023 when the market was pricing in 6 rate cuts and we're like, what? Come on. This is a very similar feeling to me when you're looking at UK CPI and you're like, wait a second, that's what you're forecasting. I mean, we had a three handle and you're expecting us to come almost two handle or possibly below. I mean, but these are not forecasts from these are analyst forecasts. I mean,
Yeah.
it's not from the bank or
Well, no,
well,
one of the bank members, Ramsden, said that he expects CPI to be close to 2%, not closer to, close to 2% a few weeks ago. So they're expecting it, and they've got some justification because we've got this energy price cap drop, which kicked in April, and that's what they're banking on. But then we've seen wages still at 6%. We've seen the PMIs saying nothing but price rises. So yeah, there's a lot of evidence to say that might offset what they're expecting from energy.
and
But
then what's
it's
happening with
just,
housing? I mean, so you guys, since we don't, well, I say we, I'm going to say me, but there are obviously a lot of North American or North American traders, people that trade in this time zone that don't live in the UK. What's happening in your in your neck of the woods as far as, you know, rents and mortgages go? How does it look over there?
it's still pretty similar to everywhere else. It's you can't banks won't lend you enough money for a mortgage because you can't afford it, but they'll let you pay 50% more in rent. So house prices have dipped a little bit over the last few months, but they've started to pick up again. But it's like everywhere else. We've not seen any sort of wholesale big, crashes or anything like that in prices.
Yeah. Okay. Well, I'm just gonna look over here at the pound Canadian, because obviously this is gonna be probably the best potential setup. I mean, because if Canadian CPI comes in a little weaker and let's say you're right, and the UK CPI comes in, let's say at 2.5 handle or 2.5% year over year, where market's looking for somewhere closer to 2%. Man, this pound Canadian could really rip higher. I mean, that could be a massive breakout. K-Man, what are you looking at as far as UK CPI goes, and any sterling pair that you're looking
Yeah,
at?
I find sterling, as I've been saying, quite resilient. I
Hmm.
thought we would actually not be as close as this. Well, I mean, we're still a bit away, and it's a very slow cross. But I thought we wouldn't be as close as we are right now to that famous 85 figure a quarter in euro sterling. So sterling is on my radar, right? Because I'm still long sterling Swiss as well. But um, I find the pound relatively resilient. So any sticky number, I think sterling could go for a walk, against quite a few currencies.
All
Uh,
right.
and if you look at cable, for instance, I'm particularly looking at an area which is around anywhere from 127 to 127 and a half, because I've got a long-term trend line coming in there as well, and a Fibonacci level at around 127 and a half myself. Yeah, any stickiness in sterling, I think, is going to be a bit of an excuse for people to buy more sterling. And yeah, we know how emotional the market can be, particularly in sterling. It's like if you want to steer away from the euro and there is a little bit less liquidity, but the sterling can get quite popular as well of a trader. So for traders, so I think any stickiness there, and sterling could really go for a walk, especially seeing that it's relatively resilient against quite a few currencies right now.
Right. And I'll be the first one to admit, it did the pound did not go as low as I thought it was going to go. I thought the pound was going to, was going to give us this double top and range extension, and I thought we would have been somewhere down in this neighborhood. But a lot like the euro, I mean, maybe we are developing some sort of triangle pattern, which, as you just pointed out, and wasn't a trend line that I was really paying attention to. Maybe that upper trend line gets violated, and next thing you know, you got this consolidation breakout too, which and I have to admit, it is way more resilient than I thought it would be. So, and it is trading as such. So got to respect the price action. I'm going to assume here. Hey, appreciate your comments. Let's take a look at a couple other things before we move along to kind of like what you guys are looking at this week. That's kind of like a standout for you. But I want to talk a little bit about where we're at with equities, because the S&P, I did, on the week ahead video, I talked a lot about the rally to new highs on very low volume, very divergent relative strength. And one of the things I have to say about the broad markets right here is that we are rallying on low volume. Now, that hasn't meant a lot in recent years because the market's been in melt up mode. But I think that last week's move was based a lot on positioning, because so many people were just calling like it's going to be a top, it's going to be a lower high, and that inflation data was enough to put us to new highs. What I said on the week ahead video, and I'm going to stand by it, is this week is very imperative, because if we close back below the breakout point, it's going to end up being a false breakout on a weekly chart, and that's going to be a big deal. Um, and this is a week that we don't have a lot of data to actually move the needle, but we do have, and we will have NVIDIA earnings actually on Wednesday afternoon, which we're gonna have to watch really, really carefully, because this one can actually move the needle a bit. So I'm gonna just put us all, and we're gonna be looking at it every day. I'm gonna put us all on kind of warning with the equity markets this week. And I don't want to be bearish necessarily. I don't want to be just, let's just straight up be bearish equities. But I think if we get back below 52.80 or so, that is going to be very concerning. And one of the other things that I need to point out is the dollar is really rallying here, and you can see, U.S. yields are bouncing. We're
Yeah,
bouncing.
I think it's got a bit to do with what's happening in the metals. The metals are getting a bit hammered there, gold, silver.
Yeah, it was a little bit of, was that a little bit of after Wednesday's expiration or options expiration. I said Wednesday, I meant Friday. Sorry guys, it's still Monday morning and it's 5 o'clock in the morning here. Would that be a little bit with the move that we're seeing here, following the weekend, on Friday's expirations?
Yeah, I
What
think
do you
this
say, Kay?
Monday morning move again, we this is not the first time we have this, right? See,
Yeah.
Asia does kind of a move. Perhaps they were a bit panicky on what were happening with that helicopter also, and then but now we've like lost like $20 in very very fast there in gold. So market choosing the other side. We're seeing the similar kind of move in a few of the emerging markets as well. Dollar China is rallying. Dollar Rand is dollar Rand actually tripled bottom around 1810. This is one that we need to put on our radar, especially ahead of those elections over there.
Well, some of us bought it on Friday. I got long some dollar
Did you?
dollar rand. Yeah, did you as well, K-man?
No,
Oh,
I was waiting for this election to go by, and if they put it somewhere below 18, I'm going to get very interested because I think we're preparing a big buy the rally, buy the rumor, sell the facting on the rand.
well, it is one of those things that for me, and this is the way I like to approach the market, is I like to get myself in a position ahead of news. So yeah, the election's at the end of the month, and there's, I mean, the likelihood of an ANC and DA, what do they call it, coalition, is probably, it's probably pretty much priced in. So you could say it may be a buy the rumor, sell the news type of event. But I want to be in an extreme area where I could be buying, like or on Friday, I bought some down here. So in the event that we're up here and we get some sort of surprise populist coalition with the rand, the dollar rand will be trading at all-time highs. It will be trading up here, probably by early June. So, I just want to put myself in a situation for a not a black swan event, but more of an unexpected event. And so that's the way I'm approaching it right now. But hey, I thought it was a really good risk reward. And again, like I mentioned to you guys just earlier, for us as traders is just putting us in a position where we have the lowest amount of risk, best reward opportunity going into an event. That's what I wanted to do. So that's how I'm going to play it. But that probably means that I'll end up getting stopped out for break even at some point, more than likely. How are you going to approach the elections? You do think it's a buy the rumor, sell the news?
I think so because the whole market is now looking at it at the positive side of the coalition. Everybody is hoping that they can get their ESCOM and what is the other one? Transnet or so in order. They also think that the SARB is going to lower the inflation target and all in one go. So the market is getting out of short run positions, even probably building on a few long positions. And I think those issues, whatever coalition you put in place, the government is not going to produce the electricity themselves, right? So I don't know. But I want to wait for well, perhaps I'm going to be too late, but that's something. It's possible. Perhaps I'm already too late. Perhaps I should have bought it at 1810, and because the next level is 18, the figure. But yeah, I want to wait for this market to go to a bit of an extreme, and then I'll probably counter trade it if I see
All
it.
right. Well, hey, real quick, it's kind of busy for me this morning because I'm handling Dale's duty. I didn't even see if there's. I don't think we have data coming out this morning. No, we
No,
don't.
nothing.
Yeah,
nothing.
and things are going to get a little bit livelier starting tomorrow, especially with the Canadian CPI. We have Arno coming in from Intelligent Invest. I'm going to go look for him really quick. But as I do this, and let me make sure I think I've got him right here. I'm gonna promote him. So Arno, you just need to accept the invitation to be promoted. Let me ask you this, Ryan, what is on your radar this week? What's front and center for you? I know we have inflation from UK and Canada, but we also have a couple central banks that are meeting this week. What are your thoughts?
Yeah, I'll be in Zed's meeting. That's going to be one to watch. I don't think we're going to be getting any fireworks. But yeah, I'm keeping an eye on dollar mix. I got in a short on Friday, another break trade. You always know when markets are moving because I keep looking at break trades rather than fading the edges of ranges. And dollar mix looks to have broken down through 1665 ish. So yeah, I'm going to see where that one wants to go. Although it's bouncing this morning, big support level around there. Yeah, managing. Looking forward to the UK data. I'm both short and long the pound via euro, sterling, and long cable. So
I'll be the first one to admit to you guys, I get a little jealous when we do that. But if you live in the US and you can't trade both long and short the pound like Ryan and K-Man, make sure you guys check out the trader funding program, because if you do, you can actually trade both long and short in the trader funding program. Matter of fact, my son's going to be doing the trader funding program starting next Monday. So just FYI, my son's going to be doing it, and you guys should check it out. If you want access to larger amounts of capital and you want to take an assessment, and then you can access larger amounts of capital after that. Once you pass, you have to make 10%, can't lose more than 6% on a trailing basis, and you have unlimited time to do it. Plus, you get inside ForexAnalytix while you're doing it for a certain period of time. Check it out. All right. K-Man, what are you thinking going into this week?
Yeah, I said for me, it's a bit of a special focus on sterling, because it's going to be interesting on those CPI numbers, and then I'm going to look for a bit of a hint on where the dollar stands versus Europe and things on those PMIs later in the week. So those are going to be my two main focus points in the immediate, well, for this week, I reckon. Yeah.
All right. So yeah, is the US going to remain exceptional or not? I think that's great.
Yeah,
And that's
because
going to be, oh, go ahead.
if I see anything that I don't like in those European PMIs, which would hint at no green shoots after all, I think the market is going to turn its attention pretty quickly to the ECB, which should be cutting in June. So that's rather the side I'm looking at for to see if the euro is maybe showing any signs of weakness actually.
Awesome. All right. Well, gentlemen, thank you so much for helping out here today. I know you guys just came off the Flow Show. If you don't listen to Ryan and K-Man on the Flow Show every day, just remember it is a free show. It's on while I happen to be sleeping, but for those of you that are up in European hours, how long ago was that, Ryan? For reference.
3 hours ago.
3 hours ago. Okay, so if you were up 3 hours ago, you should be listening to Ryan and K-Man every single morning. Thank you, gentlemen, for being here. I'm going to turn our attention to Arno from Intelligent Invest, and even though I've heard his voice here, I've never interviewed him, so this will be a first for me. So thank you, gentlemen. We'll see you tomorrow, and I'll see you guys obviously in the ForexAnalytix chat room.
Cheers, mate.
Cheers. Thanks, guys. All right, everybody, let's give Ryan and K-Man a round of applause, and then let's welcome Arno from Intelligent Invest. Arno, my name is Blake. Nice to meet you.
Hey, Blake. Nice to meet you.
Hey. I was looking at your site, trying to get familiar with you, and like I said, I've heard your voice here. But tell us, as traders, tell us a little bit about what you do at Intelligent Invest. And here, I'm going to bring over your site just because I was on it a little bit ago. Tell us what you do and how you approach the markets, and what's your approach to the markets.
All right. Well, thanks for having me on the show, Blake. And quite a surprise to have you instead of Dale. And it's really cool to be able to talk.
He's on
Talk with you.
holiday, and then he's like, Blake, I gotta go to Dana Point and enjoy the weather there next week. Can you cover? And I'm like, absolutely. I get to meet all these great people. So so it's nice to meet you as well.
Awesome. Maybe it's easier if I can share my screen. Would that be possible?
Absolutely. Feel free
Let's
to.
see.
Here, let me go ahead and stop sharing. There you go.
Okay. Give me 1 second while we click through the boxes here. So yeah, you went through my website, and what I do is provide people with insights in financial markets related to, of course, the major stock market indexes. There's a very quick video people can watch. I'm not going to click on it. It's about 1.5 minutes long that will really briefly explain what I do, and that is primarily used for my forecasting, the Elliott wave theory, as well as regular technical analysis, with divergences, trend lines, support and resistance, technical indicators, all those things. I look also at timing, like seasonality, and try to bring all those together to come to the most likely path the market is going to take, with the Elliott wave as the primary analytical tool. And for those that are unfamiliar with the Elliott wave, you click on my menu on my website, go to education, and then Elliott wave principle. And it will very briefly explain to you, because this is based on other people's work, that is hundreds and hundreds of pages of work, where it explains that financial markets, including, for example, the Forexes that you guys were talking about earlier, move in predictable patterns. In this case, it's called waves. It's proposed by Mr. Elliott in 1900s. And you get most of the time 5 waves higher, and any corrective structure then after a bull run has happened is often in 3 waves. And this can happen on any time frame, from minutes to days, weeks, months, years. So it's very self-similar pattern.
Do you mind if I ask a question here? Because obviously, when you're looking at equities at all-time highs right now, and
Right.
I actually just met with another Elliotician on Friday, named Jim from Macro Tides. He believes we just completed wave 3 of 5 in equities. Do you see the same thing, or do you think does your count telling us that we're completing wave 5 at this point?
No, I think we're in completing a 3rd wave, and I'll get to that in a moment.
Okay,
how
great.
I'm looking at it, and I thought, what theme do I give to today's talk? When I do webcasts for my members, so folks can sign up for my newsletter that they will get daily. And if you don't want to hear me analyze the markets, you think, this guy, whatever. I also provide what I call trading services. So these will just send out trade alerts, as you can do with it what you want. But those are based on models that trade the markets based on strength, momentum, trend changes, and all those things. And we have some very excellent returns, and all you get is just a trade alert. Super simple, right? I always call this is maybe for people that want to start trading. It will give you stop losses and when to buy, when to sell. Super easy. Not based on Elliott wave, just pure, a mechanical trading system. So that's another part. And I do no analysis, just the trading systems do their signals every single day. So that's also something people can look at. You can supplement, of course, my analysis with this. And sometimes my trading models are right, and other times I'm right, or both are right, right? It always goes back and forth. So as I then do webcasts for my members twice a week, I always wonder, what kind of themes should I do? And this is a famous quote from the movie Anchorman. I don't know if you're familiar with it. It's with this comedian, and he plays Ron Burgundy, a anchorman from San Diego. And there's a famous scene where one of his colleagues says, they've done studies, 60% of the time it works every time. And that's with market analysis. Whatever we throw at it, it can never be right all the time. Whatever layer of analysis we add to it, at some point you're always dealing with probabilities, because it's a complex system, and a complex system can simply not be predicted all the time. And that's kind of the theme I want to present, because it provides people with with realistic expectations on, all right, well, this guy says this, and this lady says that, and he says sus, and I say so. So which is it? Well, sometimes they're all right, and sometimes they're all wrong. And that's just something we need to take into consideration, that things are fluid and might change a bit. But I agree. I think we're wrapping up a third wave. And before I get there, allow me to go back in time. This is, I think, from my last interview. That was in November last year with Dale, where I said the S&P 500 would go to 4,800, 5,000 plus. So that's been a pretty good forecast, and we got there pretty rapidly. And I think we're now at 5,300, something around there. And what we're now tracking is either this is completing a what we call irregular B wave, what is a flat correction, or we're still in this third wave. Those are my two scenarios. So this is a B wave that will target around 5,350, and then we get a decline, which you can also say, all right, that the next decline will be the fourth wave. So it's a little bit interpretive. How are you going to interpret the previous decline versus this current rally? And this current rally, honestly, as long as it even stays above Friday's low, we should be able to target somewhere around 5,350. And this is what we then call a irregular B wave, and they've happened before. And irregular B waves tend to kind of target when the third wave here on the left-hand side misses its upside target. I remember in March of this year, I was looking for the S&P 500 to reach about 53.45, 53.95, somewhere around there, I believe. I don't have the number on the screen here, but it failed. So I was kind of looking for it and thought, oh, we're going to get there, but it started to break down, and we got the decline in April, and now we're here. And this often tends to happen in the fourth wave. When the third wave doesn't get there, third waves, right, based on Fibonacci extensions and all that stuff, have a certain target and didn't get there. Then the B wave, as we say, often does the trick. And if we zoom out, and we have this on a daily time frame as well, an A, a B, and then we get the C wave, or this wave 4. So yes, you can count it still as being in the third wave. Another way to look at it, again, you're right, you're interpreting the price action. Let me see if I can find the screen. Is this being a very large ending diagonal. So this wave 3 is still underway. It's simply subdividing in another ABC, because if you're in the diagonal of the ending type, it means this is the last fifth wave here in blue. It's going to be all this overlapping ABCs.
Should take us maybe one more high as we go into the summer then.
Yeah, pretty much. So this black wave 3 should be wrapping up over the next few days. That's kind of the idea here. And this is a chart on the monthly time frame. And one thing that definitely keeps me on my toes is this insane negative divergence we see on the technical indicators, on the MACD, on money flow. Money flow I find very important because liquidity drives markets. But we also know, on the other hand, negative divergence is, or any divergence is only divergence till it's not. And one way to look at it is here, back to the hourly chart. We had this negative divergence here on the RSI 5, on MACD, even on the money flow. And you need to take that into account, right? You're also a market analyst, and those things do matter, but it's not something you want to hang your hat on. And the market completely ignored it, right? We got this very strong rally based on, I think, a little weaker than expected inflation data. At least it wasn't stronger than expected. That's the motto these days. Is as long as the inflation data is not stronger than expected, then we should see the Fed lower rates soon. But I've constantly said since the beginning of this year, I don't think we'll see a rate decrease. If anything, we might see a rate increase. But so far, I've not been proven wrong. And regardless, the market keeps rallying. But most of the time in my work, I don't really even mention the Federal Reserve or anything, though. I do remember here on the Fed meeting day, early May, I sent out an alert half an hour before the Federal Reserve would meet. And I said, hey, we've completed 5 waves. We're going to look here for a bounce to about 5,050, plus or minus 10. And we've got 5,095. And then we should see a decline. And the decline, both the rally and decline worked. So that was great. That was a very easy trade. And then I was actually looking for lower prices going forward over time. And one of the reasons was, if you look at seasonality, let me refresh this chart. So this is seasonality of the S&P 500 for only election years. And it kind of had a dip here, April 20th. And I think we got a dip here, April 19, somewhere around there. And then we should see a rally into April 27. And we got that rally here into April, I think 26, 29, somewhere around there. So far, so good. Was following it. And then we should see this decline on average, right? Seasonality on average. And it didn't happen. Instead, yes, we dropped into May 3, May 4, I believe it was. Again here by the Fed meeting. So far, 3 out of 3 we got correct. And then all of a sudden, the market started to diverge. It did not decline into the end of May because it should bottom here around May 22, 26. Well, what did it do instead? It rallied. So you can see here, right? So 60% of the time, it works all the time. We nailed the low on the timing basis. We nailed it. So these are forecasted target sums here. On the pricing basis, all that stuff. But then on the timing basis, all of a sudden it starts to do something else. And that's why I always say, it's never 100% reliable. Anything you throw at it. So
well, yeah, it's the markets. I mean, it's all about probabilities, and you're definitely going to get a lot wrong and it's,
of course,
it's managing risk.
It's managing risk. Yeah.
So Arno, let me ask you this. You mentioned a little bit about how you were feeling about the Fed. How much let's just say macro analysis factors into what you're seeing from a technical point of view?
Not too much, but big tech earnings, the big guys. I think we have NVIDIA coming up on Wednesday. They matter. They absolutely matter. So if I see a wave count that starts to complete, even from a NVIDIA point of view, of course, I track NVIDIA as well. Then I definitely do mention it and say, we got big tech earnings coming up. We're going to have the Federal Reserve meeting coming up. Fed speakers throughout the week, not too much. And of course, the inflation data, those do matter, absolutely. And then I do try to reanalyze what I have. Is what I have really correct? And if not, then I will adjust. But I always tell my members, we have certain price levels above or below which a certain wave count, either be bearish or bullish, is invalidated. So here I have these levels, and I do mention it that we were going to have the CPI data when it was last week on Tuesday or Wednesday. I do mention it, so it's time to get cautious. Watch those price levels because they do matter. Absolutely.
Yeah. Okay. I mean, so here to give you maybe a good example, and maybe you can add some color to this. I have a 17-year-old son, my youngest, who's I'm teaching him how to trade. And one of the things that I tell him is, look, when you're trading around price, you got to know where people are wrong. And as long as you know where people are wrong, that's like your biggest edge that you can have. And and so so when you're looking at price action and you're watching it, how does that factor in, your markets, because in your trading, because you can say, well, I don't know if I really want to get long up here. I just watched the S&P rally 8% over the course of the last month and a half. I mean, do I really want to be chasing it up here? Do you ask those questions quite a bit?
Oh, absolutely. And I do write it almost daily. Make sure you know your risk reward, especially from a time frame perspective. Are you in it for just day trading, or are you in it for swing trading or long-term investing? Is this then the right time to buy? And I always say be very cautious, because we're really high up here. But from a day trading perspective, there's still plenty to be made. I don't think you should be too much worried about where we currently are, as long as as you said, where are we going to get wrong? And that's where I then start pointing out, like, okay, I still think we can move higher unless we start breaking below these levels. So those levels, right, depending on your risk appetite, you can use as a stop loss, for example. And sometimes we get whipsawed, of course, it happens. But otherwise, always know your trading time frame. Some people are in it for very short term, and others are in for the very long term. But even for the very long term, please ratchet up those stops. Take profits along the way. It's fine. You can always catch the next bus. If you say, "Wow, man, I sold at
That's
4,000.
That's right.
Well, then just catch the next boss in the end. As long as you're making good money, it's not about trying to catch 100% of the move. That's not what we're in for. But you want to catch as much of it as possible. And if you get 60, 70% of it, I think you're doing really, really well. And if you have those realistic expectations, I think you'll do great. But again, no below or above which you're wrong. And the current market has been a rally. As you said, it's been rallying. So we continue to view it as a rally, be it either as a B wave here or as a, let me show you that, as a continuing much longer impulse, whatever way we interpret it. Make sure you know below which this rally is going to tell us it's over, right? The market is going to tell us at some point this rally is over. So we have a version where we say, you know what, now we're in some sort of 3, 4, 5, 4, 5 type of setup, right? So the market keeps subdividing higher. Even though, as you can see, this wave is kind of starting to run a little bit out of room, out of waves to go. But this could target 4,000, for example. But then we keep raising our levels where we say this is wrong. As you can see, this is from I think it was on Thursday I presented it. I was out traveling on Friday to a wedding, and I couldn't do an update on over the weekend. I came back late last night, so if I still sound a little tired, that's why. So now we keep raising those levels, right? Because the market keeps moving higher, and as long as it does,
you got to respect it. You got to respect it.
Yeah.
All right.
Yeah.
Yeah. Well, hey, Arno, I want to say it really nice meeting you. I'm actually I just followed you. Make sure that you all follow Arno on Twitter. You're at Intel with double L _invest on Twitter. And Arno, I'm going to reach out to you via Trader Summit and bring you on as an interview sometime. Sound good?
That sounds great, Blake. That would be wonderful.
Arno, really nice to meet you. And folks, this has been Arno with Intelligent Invest. I'm gonna go ahead and sign off here, but Arno, I'm gonna be reaching out to you and bring you on, like I said, Trader Summit. Thank you so much for spending your time with us today.
Thank you for having me, Blake. It was really nice talking to you.
Same here. All right, traders. Remember, Dale's going to be out all week, but I'll see you tomorrow morning on the F.A.C.E show. Thanks everybody for tuning in, and have a great Monday. Tomorrow's going to be really, really busy with Canadian CPI. So thanks everybody.